Welcome back to my channel. Today we're going to review Zenlink. For those who are new to my channel, what I do is I do research, feed it into a model. The model has an output, and the reality will weigh the model to how accurate it is. I will reflect and modify the model so that we can get more accurate outputs, and we can correlate to a potential higher ROIs in the cryptocurrency space exclusively. All right, this is the model's output for Zenlink, and I'm going to just go ahead and get into it. So what does Zenlink do? Well, it's pretty simple here. This is one of the more simple projects to review. It is a cross-chain DEX on Polkadot. You can launch. It is a toolkit for launching DEXs within the parachains on Polkadot. It'll provide the modules or tools needed to be able to build swapping capabilities that will connect liquidity pools into your application if you build within the parachain environment on Polkadot. It's a composability hub. Modules are easy to insert in the parachains, and they will have shared liquidity, shared WASM. It has WASM capabilities from their partnerships, etc. So if you're a developer, you could connect your app, WASM interface. You can develop an application that plugs into their APIs, modules, or build your own toolkits into their ecosystem. They also have the Ethereum virtual machine, and another thing that Zenlink will have is smart order routing. This is similar for those who are familiar with 1inch. It'll allow for within the Polkadot ecosystem, or even just cross chains. When I say Polkadot ecosystem, it's Substrate. So if they build out toolkits into Substrate, there's other projects like A0, which is also a Substrate project that this one will probably be able to communicate with too. But it has to go across chain, obviously, and you have to build that bridge if you want to connect it. But it'll connect Kusama, Polkadot, any of the parachains. That's what this project is going to allow for doing. So basically, it's like a DEX in the Polkadot, the Substrate ecosystem. And but it has that 1inch capability, which means that you'll get the best pricing through the various liquidity pools, and it'll allow for, like if you're familiar with 1inch, then you'll understand that that's what it does, allowing for you to not to influence the price too much, access multi liquidity depths if you want to do swaps, especially with larger amounts. Okay, so the model output. Get right into the this part of it. So the future increase in demand for the token, model expects that to be the case. Price FOMO, expect that to be the case. It is a very small project. There is not a large social media presence, so it could be considered early to social media because it's a very small project. It's not inflationary. In fact, it is deflationary. In quarter1 that it was operating, it burned 0.2% of the supply. In quarter2, it burned 0.5%. In quarter3 of it operating, it burned 1.2% of its total supply. That's the total supply, so that's pretty good. So the token is deflationary. But remember, there's tokens that are yet to be released in circulation, so that is felt like that feels like inflation. Now, dividend irrelevancy. The token is entitled to revenues, so it doesn't really matter how the tokens are distributed, anyways, because the tokens are entitled to cash flows and in the form of those hidden dividends by token buyback burn program. So that the token is a buyback program. That's one of the token abilities, is that it has the burning mechanism, and I think that's a very strong mechanism. There's a lot of people that agree that the best token economics is to have some sort of burn, or to have a reserve for expenditures that you think you can get a better ROI on than doing a token burn. A token burn is like a dividend for those who are unfamiliar, but also a reserve. Funds for the project are a way to have expenditures to grow the business. So, they both can have their pros and cons. And you have to look do I think that they're spending the money wisely in these funds? And so, you know, and this one has both of those capabilities. All right, so let's get into the roadmap. You know, like what the roadmap looks like. So in Q1, they finished, or they finished their of 2022. You know, the first half of the year. They finished the software development kit, so that's important in getting anything done. That's important for developers to integrate into this business. But you know, there's that's one of the elements that could lead to potential growth of the business. Some of the things to be built on in the future is governance, the DAO NFT abilities, A-star, parachain connection, mobile interfaces, cross transfers between chains, which that's a big one too. More parachains, DeFi modules, that's another big one. So this looks like a pretty good timeline. The better they do at delivering this timeline, the better I think that this project could perform. So hopefully they, you know, like they can deliver on all these promises. You know, governance would be great. You know, X transfer, that's obviously going to allow for the smart order routing. You would need that cross transfers. That could be powerful. And also the DeFi modules for different parachains to integrate. So those are all things that could lead to price action and more usage of the platform and more burns, which means higher ROI. Let me cross all this out. All right. As far as price performance, there's not major ICOs. You know, like they use most of the tokens are issued in a release type fashion. You know, they do have some funders, but it's not one of the heaviest components. Looking at price action over the long term, in a lot of these pools, if you had 70% APY, you beat how far this thing has performed. Like 70% APY has beaten how far this has performed in comparison with the market in general, because the token's down 98% from when it started, but you have to consider if you're entitled to the token's release by participating in the ecosystem, and that's what it counteracts that negative APY. And so, like, if you were in a programs that were 70%, and there's many that there are, so that, it, you know, I put this as good price action because it's fairly neutral so far. And it would be hard for me to calculate what an individual, how, you know, it depends on what ecosystem, what APY program participation, you know, to get, you know, to beat the market's general APY. So you would have like about average crypto performance if you're participating in the ecosystem. And if you didn't participate, that's where you would get burned. You know, and a lot of systems I'm noticing, a lot of systems in crypto in general are starting to have, like, you have to be a participant, you have to be governance, or you have to be a node runner, etc., in order to not feel the negative effects of inflation. All right, and so low market cap. This is an extremely low market cap project. It has a 2 million circulate market cap, that fully diluted 6 million. Its price currently is 6 cents. That is an extremely low market cap, so it could do very well just from the fact that it is so low. Now, exponential growth, as I stated before, this is going through exponential growth. Q1, 0.2% burned. Q2, 0.5% burned. Q3, 1.2% burned. And it doesn't even matter that the market price of crypto has been collapsing, because this is what matters, is how much of the supply is getting burned. And that is a real payment in terms of holding the token. Like, eventually that should lead to price action. So as long as the team keeps delivering, as long as they get more to total value locked. Now, okay, so it is experiencing exponential growth of that burn. Hopefully that trend will continue. We only have 3 data points, so let's consider that. I put the niche as neutral in this model because it does only have 8 million total value locked. That's very low. That could, you know, that means that this thing, they need to really focus on getting some more value, total value locked in their ecosystem. And, you know, this is a bear market type situation. So if the market goes up 10x, this would be 80 million at the current valuations, because it's all crypto. Most of it's crypto. So, but still, they need to attract more total value locked in their ecosystem. Liquidity depth is also around $2,000. To move the price 2% is $2,000. So it's virtually zero. So that's why I put all that as yellow, as neutral. But remember, it's a super small market cap. All right, so now I'm going to get into some of the governance components of this project. Regarding the vision, ultimate, open, and universal cross-chain DEX for building DEX on Polkadot with one click. Composability is one of the major components that can be selected and paired in many combinations. So their vision is pretty clear that they want a composability software toolkit for deploying swapping capabilities that will plug into their services. Now the team, most of it is anonymous, so that is a negative component of this project. Let me get this. That is negative or neutral. I put neutral negative because there is this project still relies on the team to deliver, but a lot of them are anonymous. The CEO is the only one that really revealed himself. The biggest risk in this project, in my opinion, is that the team gives up or that they don't suffer reputational loss for quitting. The reason people you want to invest in projects that have teams is if something wrong goes with the project, it goes in the record. So there's a significant motivation to perform well. That's why you want people to tie their identity to projects so they have reputational loss if they cause suffrage to, some kind of pain to their investors, some kind of pain to their customers. So there is that risk. Now this is an audited project, and I'll get to that it's audited by Immunify, okay, in their partnerships. But still, they've been delivering code, etc., and it looks like good code, and they've been doing good at beating deadlines. But the anonymous team is mostly due to being in China, and an anonymous team doesn't suffer consequences if they just up and leave. That's some of the bigger risks with this. Now, I will say that the token is the ultimate control because there's more incentive. There's more incentive for them to deliver than there is to just walk away because there is a huge opportunity here if they're successful. So I believe the incentive is right for them to deliver. High quality actions, I put that as green. Regarding the strategic partnerships for this project, they got 3 web grants, Akala, Moonbeam, Frax, Multi-Chain, Elixir Network, Nomad. These are all part of the Polkadot ecosystem. They're also cross-chain bridges. These are the types of partnerships you want to see. Also Immunify, the bug bounties, to make sure there's nothing wrong with their code. And Gear is a WASM WebAssembly on dot substrate service provider. So they have that partnership as well. But regarding all the other things I put, this is mostly neutral. The CEO has revealed his identity, Leo Gao. Chinese-based team is anonymous, but that's, this is the CEO right there. And he's been in some interviews, like he was meeting with the Gear team, etc., talking about the future of DEXs. Okay, so in a lot of these other components that lead to price action, there is not going to be a moat with a DEX. It's very difficult. It's a major weakness of DEXs, and even this project has suffered vampire liquidity, which means that people only come into the ecosystem trying to mine for liquidity, farm for liquidity, and then they up and leave. They don't keep they don't show any loyalty. They up and go to the next best opportunity for APY. So that's something that these projects have to consider. If they're giving away their tokens for getting people to start using their ecosystem, it is beneficial to get those people there to use their ecosystems because they get used to it. But they got to be very careful of Vampire, and this one did suffer a little bit of it. Obviously, because I think they were at 40 million total value locked before Stella Swap and some other swaps opened up. And also, I know that at some point, Uniswap is coming into the ecosystem of Polkadot as well. So that could, see how that affects things. This is neutral, don't have anything there. Strategic upgrades, so these are kind of things that are relevant. Best option to competition, I'll put that as neutral for now. I will say that this is one of the best DEXs in Polkadot because it's it's on Moonbeam, it's on Glimmer. It's on Moonbeam and it's on Moonriver. So it's on both of those, and it's also on the Ethereum. It's also on the Polkadot.js substrate. So because it's across these, it's got those capabilities. Developer experience, developer motivation. These are neutral things, I said, because the budget's going to be low. User experience, I think that'll be neutral. Network effect, neutral. They do not have any first mover. They have, because they have such a total low value locked, I put it as negative for first mover because it doesn't really matter. You need to keep the liquidity so that it has dependence. It has good price slippage. That's their service provided. Their service provided is price slippage. And if you want them to have some of the least price slippage, which they don't have now, you know, so that's one of the negative things. Let's see here. High value upgrades, I think that will be fine. I think the value of, so far they've been delivering. That's why I put these things as green. They've been delivering services. Like for instance, they delivered that software development kit. If the developer team keeps delivering, I do think that there's a future for this. They have to keep delivering. If they walk away, it will die. And I have seen that a lot. So hopefully they keep delivering. That's where the biggest promise is here. Large business models need a token. So I put that as, you know, green. When governance and DeFi modules with composability are established, I expect there to be somewhat level of business models that would want to own the token because, you know, if they start getting traction, then the token will be useful to businesses. So that's a big if, but that is one of the capabilities. Now, you know, token and regarding what this token does, it does the burns. 30% of fees go to burning the token. Governance, DAO, treasury, running all of that will go live. It's not live now. That's why I put it into centralized governance. But when that goes live, it will move to be more decentralized. And that could potentially lead to it having good price action as well, because it'd be less dependent on the anonymous team. We want to get it open source and working with the governance. That could be potentially powerful price action in the future. Token burn from income incentives. So that's what the token is used for. So it's a valuable token model. The value of the target market, swapping on Polkadot ecosystem, automatic market maker aggregation, backend services. It depends on Polkadot and Substrate success. I think it's potentially in the trillions. You could potentially see trillions of dollars moving across Polkadot. So this project is somewhat dependent on this project is dependent on Polkadot's success as well. That makes it a little more risky, in addition to the anonymous team. But that is a very large market. There could be several DEXs worth several billion, you know, hundreds of billion. And we're talking about a project that's worth like 2 million diluted, or, you know, in circulation right now. So it could be hundreds of X's. This project could be 100 of X's potential. Tokens per person, all these other neutral things. So that is the public evaluation. So final summary. It is a low market cap with accomplished CEO. I put no for that. Early to social media, I put yes for that. And it has a live niche, so I put yes for that. The pros, very low market cap, exponential growth so far in burns, which is good. Change in surrounding ecosystem. So DOT also launched the cross-chain messaging, so that potentially will lead to more traffic as well. And it has index-like exposure for Polkadot. So those are some of the pros. The cons, lots of competition, not only in Polkadot, but elsewhere. Low total value locked. Team must not give up and find a way to get more total value locked. They must deliver, and it is mostly anonymous teams, so that's a con as well. So that is the evaluation of Zenlink. The next thing I'm going to do is my Patreon exclusive decisions and statements on what I think of it as an investment opportunity. But this is the public information where you make your own decisions based on the model, and you can see where you think it stands and make up your own mind. But the model output goes to patrons, and that's where I will do next. Okay, if you like this kind of unbiased content for finding the highest ROI in the cryptocurrency space, please like and subscribe, and I'll see you next time.